It was like 2 seconds too early, but we're live now. Hey, everyone. Welcome to this week's live stream for Cashflow University, or CFU. We're happy to be here with you guys. On with us today is myself. I'm Steven. I'm a founder of Cashflow University. And with me, we have Russ. Hey, that's Uzi who just said hey. Okay, fine, Uzi. We'll put you on too. Here you go. Uzi says hi, everyone. That's good.
Sorry about that.
No, it's good. It's all great. It's all good. It's all good. We got Russ with us tonight. The Admiral, he's with us. Is what time in the morning is it there in Venezuela? The Admiral.
Venezuela.
Yeah, he's in Venezuela still.
Brazil, but yeah, it's 6:35 here, so I'm 2 hours ahead of New York.
Oh, nice, right on. Okay,
and 4 hours ahead of you. So.
Oh yeah, I know exactly. I'm like, man, it's like noontime here. I gotta have some lunch. And then we got Kyle in the house with us today. Hey, Kyle.
Hey, what's up?
Hey, not much. Thanks for putting some money in my pocket with Norwell. That was awesome. Waking up to that this morning.
Yeah, that was a nice play.
Exactly. That was excellent. And then last but not least is Uzi. How's it going, bud?
Everything's going well. Everything's going well.
Nice.
2026 is off to a decent start. So
that's right. Rolling. That's right. That's right. Now that plays nicely into where we're going today. So what we've got for content is we're going to go through the January trifecta. Kyle did some good homework and analysis through the latter half of December to get into the Santa Claus rally. What does that mean? January trifecta, we'll get into that. And then on the second half, I got some really cool little things I want to share with you guys. And, assets, what are the top assets that we have in the world? What's going to happen in flipping those around in the next 10 years? So, Russ, I'm looking for your insight, your wisdom on what's going to happen over the next 10. And we'll cover off a little bit of covered calls. Maybe we could get the Admiral or Uzi to take that, go through a little bit of covered calls. I got some good, nice, easy content for that. You guys will ace it. They haven't seen it yet, so I've been putting them on spot there, but that's okay. They're pros. They know what they're doing. And then last but not least, I got the WTF moment of the week. I'm looking forward to sharing that. WTF. I was like, what? You got to be kidding me. That can't be right. All right, let's get into it. Kyle, I'll let you take the stage here. Step us through.
All right, first of all, hey, I'm Kyle. I'm one of the pro traders, and I've been investing and trading for about 25 years off and on. And then you'll see 2 pro trader alert channels for me, Kyle Trades. And in that channel, I'll do cash secured puts on larger stock like Tesla or AppLovin, things like that take a lot more collateral. Sometimes smaller trades, but typically larger. And then I have a Kyle 10K trades where I use smaller spreads, leaps on smaller, cheaper stock, things like that for smaller accounts. And then I talk market psychology and charts every single day. I love charts. I live in charts. So yeah, let's get on to this. I'm very excited to get my first Stock Traders Almanac, a physical copy. I got it in October for my birthday.
We got one here today. We're giving this away today. This is the one we're giving away.
Nice. All right.
Yeah. So I can't believe I didn't lead with that. At the end of today's episode, we're going to give this one away. This is the one. I even think it has. Yeah, exactly. CFU live stream right here. It's already been marked off. That's pretty cool. And then either Kyle or myself will sign the inside for you. So one of our lucky, I don't know what you call it, listeners or watchers or people who are on with us today are going to get this copy. So what Kyle's talking about right now, we're going to give this one away.
I thought, so for the last 2 months since Kyle's had the Almanac, every time he talks about it, I thought it was like from 1958. He was reading this old book. I see that since 2026.
Yeah, no, it started. No, it goes back even earlier. It was like the Egyptians had it on papyrus. They used it when they were trading.
Right,
when they were trading water futures, they used it.
Yeah, but no, it was created in the 1960s, so it's been around a long time. And I'm excited because, back when I was a kid, I always used to see the Farmer's Almanac at the checkout line of the grocery store. I'm like, man, how do they know what the weather's going to be like next year. It was fascinating. And so it doesn't tell you exactly what's going to happen, but it's a good guideline based on historical data. It's pretty awesome. All right, so let's dive into the January trifecta. I'm doing this on a small screen, so I've got to get it a little bigger on my side. So there's 3 parts to the trifecta, and if all 3 hit positive by the end of January, then it's a crazy 90. The S&P 500 is up 90.6% of the time if all 3, which is the Santa Claus rally, the first 5 days of January, and then January close. We're not going to get that this time because the Santa Claus rally ended negative, barely. But we did have a really good start to the January with a 1.11% gain first 5 days of January. So that's good. When you have a mixed, when not all 3 of them are green, it's about a 60.5% chance that the S&P 500 will end higher by the end of the year. So it's a really cool stat. All right, so here we go. What is the January trifecta? Santa Claus rally. So I'm sure you guys have heard it on socials from us. That's going to be the last 5 days of the trading year, plus the first 2 of the next trading year. It was looking pretty good this in December, the first part of it, until it couldn't get any traction. So we basically broke even, but technically slightly negative. So that one did not hit.
Sorry, why was that, Kyle? What, we started up pretty good, but then it kind of fizzled out. Do you remember what the catalyst was on that? What made it? It wasn't until like kind of the last little bit, right? Like the last 2 or 3 days within that rally.
Right. I think because typically during a holiday shortened week, institutional money is not around to trade. So the bias on retail traders is to the upside. So they typically float it up. Like Thanksgiving of last year, we had a really nice rally. So I think the beginning, Christmas Eve and the day after Christmas, it was good. It was low volume. And then maybe towards the end, we got some institutional, some selling, but enough to push it down negative.
Nice.
So we have our first historical, let's see, what do I call it? Breaking history, I should say, which is the Santa Claus rally fizzled out this year for the 3rd year in a row ever. I don't know what that means. We don't know yet. And the Santa Claus rally, when it fails, it doesn't mean that the year is going to end negative the next year. It means that there could be a 10% correction, a bear market, or a negative year. So it's highly likely we get a 10% correction at some point this year. So then it would be on target. So moving on to the first 5 trading days of January. So historically, a positive start has often preceded positive annual returns. And we ended that at 1.11% positive. So that alone gives a 65 to 75% chance of a positive year. Interestingly, I went to Gemini earlier today, and I just asked, over the last 100 years on the S&P 500, how many were positive? And it's basically 76%. Like 24 years were negative. So even taking out all these barometers and everything else, the market goes up typically. And just remember that. You look at a long-term chart, it just goes up.
Up and to the right.
Exactly, with volatility. Yeah. But so that's a good start. January is probably going to be the end of January, which is the January barometer. That's how does January do as a whole, and how does it end, positive or negative? I think that's the most important piece here. Let's see, I have a stat somewhere I wrote. If it's negative, if January ends negative, it's more than a 50% chance, or maybe right around a 50% chance that the year will end negative. It's in a midterm election year, these don't work as well as non-midterm election years. That's one caveat I have for the S&P 500 first days of January. It says the indicator has a poor record with midterm election years. In the last 19 midterm election years, only 9 years followed the direction of the first 5 days. So that's just something to remember as well. Midterm election years can be a little bit squirrely with a lot of more volatility. So we got a few weeks left to get that January barometer, but as of the close today, things are looking pretty bullish. We're on the cusp of a breakout, I think, on the S&P 500 and the Dow. The Nasdaq's still lagging a little bit. It needs to play catch up next week, so they really all break out around the same time.
So, like with all this, Kyle, it kind of feels like we're like trying to read the tea leaves. You know what I mean? Like we brought in all these different variables. So Santa Claus, first 5 days, January barometer, midterm elections, and we're trying to like bring them all together in such a way that we can say, aha, because of the way this all fell into place, we have a 70% or a 75, or we want like a 95% chance that this is going to be a positive year.
Correct.
Like, is that how it's going through your mind, or like how are you trying to put all these parameters together?
Yeah, it's kind of a guideline. It doesn't really. I'm not going to trade necessarily based off it on a day-to-day basis, but it kind of puts an underlying foundation on what the market might do this year.
Mm-hmm. How about yourself, Uzi? How do you take this into like the context, or how do you use this for your trading?
You know, it's funny. By the way, I'm Jim. I'm Uzi. I'm trading a while. Trading since 1998 full time, and I'm like most of the guys on the panel here. I'm mainly a premium seller, but I do go directionally if I see an opportunity. But getting back to the question, so the January effect goes back all the way. I mean, I remember us talking about it even when we were day trading, just day trading stocks back in the day. It meant something because everyone was looking at it. I think the more eyes and CNBC, which was what everyone used to watch back in the day, because that was the financial channel. Now you have stuff live on YouTube and everything if you're really looking for diversions from CNBC. But CNBC was really all the rage, and whatever they were talking about, everybody was talking about it. And they would always talk about the January effect and how the first week went. Usually was how the minds, if you want to call it, the market minds would say, well, that's how the year should go. And I really don't remember, because it's been so long, how many of the years worked out to follow, the premonition, if you want to call it that, or the result of the first week and how the rest of the year works out. But I do think it lines up with what Kyle was saying, though. You're going to have your swings. I mean, we used to have some 10, 15% pullbacks, and they were pretty harsh, right? But at the end of the year, if the first week of January or the first month of January, the month of January went well, you kind of expected that things would come around and close for the year decent, 8%, 10%. We never really saw, we did see 20 and 30% years, and that was mainly in like 1998, 99, 2000, when it was heading with the bubble. We were heading toward the bubble. But after that, I mean, we had a really nasty correction from like 2001 to 2004, and there were small rallies, but it was a bear market like we haven't seen in the last 15 years. And I don't really recall, let's say, how those January years projected things to be, but I don't necessarily live and die by it. I like to watch it and see what it does suggest, and then keep that in the back of my mind. I know for me personally, I've been expecting a nice drawdown that stays like a sustained drawdown for over a year now, and we really haven't gotten it. We had a shakeout last year in April, and then before that in October. Before it was scary, and it was harsh. It didn't last long. It was a V bottom. I don't think we're going to get that this year. I do think that what Kyle was saying, this year we might have a 10% correction, or maybe a little bit more, and it might be a little bit. I don't know. I'm just feeling that. It's just my feelings. I just think we're due for that correction that doesn't fix itself with a quick V, and then that's when we're going to really find out where the weak hands are, and really, where the market, will be at the end of the year. I think we just might, what I'm trying to say is, I think we might have a little bit of a longer pullback that stays down, really gets people scratching their head and worry that this might be the down year for the down year. Yeah. and we probably come back and maybe we eke out 4 or 5%, something like that, under 10. I don't think we're going to do over 10% this year.
Okay,
But in
that's a
between,
good
I
one.
think
Yeah.
we're going to have
Well,
something.
but because I wanted to kind of ask, like Russ, like for example, when last year was happening around, I think it was like March, April, with the tariff announcements, and everyone was kind of running for the hills. We didn't know how to play this, how this was going to all work out. At that point in time, did we look back and say, well, we didn't have a Santa Claus rally, so that lines up that we have a tariff announcement now? Or how was January? I mean, I don't even remember how January went last year, and I don't remember how the culmination of the January trifecta came together or not. But I do remember that we didn't have a Santa Claus rally. But other than that, when the tariffs hit, did we actually even think, oh, this is valid or not valid because of those January indicators?
I personally don't. I'm a little bit like Uzi and Kyle. I keep it in the back of my mind, but I don't trade I trade around what's in front of me. The old adage we've all heard: past performance does not guarantee future results. We've all heard that for 20 years. When you're looking at mutual fund returns and any stock returns, but so that's accurate. But it's the best thing we've got. It's just another element that you can put into your own thought process. The January stats that Kyle put out from the almanac, same kind of a thing. Okay, it's good to keep in mind, like Uzi said, you keep it in mind, but you don't really trade on it, but it's there. So you might be expecting a better than average year or a worse than average year. When it's like when the market gets extended, really extended. And that's how I've been feeling. I'm not really comfortable. I posted about it. So I'm stashing a little more cash. And that's how I'm looking at it until the market really tells me where it's going to go. I'm hoping, we keep launching up, but the corrections are going to happen. We know that. And we are overdue for a larger one. So I keep it in mind, but I really just trade what's in front of me. When the April 1st tariffs happened last year and we tanked, I had a fair amount of cash. Now looking back, I wish I had more because I was buying Moo at $71, $72, hand over fist, and holding on to these leaps, and they were getting crushed for the next 2 weeks after that. But then it turned around and it started taking off. So I'm a little more optimistic, but that's my nature. I still think we're going to have a choppy year. And I think why you get those V bottoms is because there's so much money to be made in the AI sphere that, it's hard to keep these people with money away from these stocks where they could, go really high up. So like, even though we come down, people are starting to put in their money and come right back up because of the opportunity for the big gains. So I think it's going to be more of the same. It's hard to keep tech down and AI down, at least for the foreseeable future. It'll happen at some point, but I still think it's going to be choppy. And I think we're going to end up 16 to 20% this year.
Yeah, like what you said there, that past performance does not guarantee future results. That was part of the slide that we had here on the next one. So great segue into that. Thanks a lot, Ross. I appreciate it. I know. I was like, wow, he didn't even see the slide deck. And here we are actually talking about what we got to like, I wasn't just writing. No, it was all here. Another thing too, you said there with Moo, when you said Moo, I was like, man, we're going to the moon with Moo. That's going to be fantastic. And as silly as that sounds, it's going to happen. We're going to put Moo chips on the moon.
No doubt.
And AIs are already getting into space. Google and Tesla's already got data centers or trials in the space right now. And one of them's going to have a micron memory chip in there one day. So it's going to happen, man. And looking forward to hearing your impression on that when it happens. Okay, so going back to Kyle, just wrap it up here for us on the January Trifecta scorecard. What do we got?
Yeah,
it's all a bunch of ones.
Right, that's weird, huh?
Yeah.
Sometimes I think the market, is pre-programmed, but that's another thing.
We are living in a simulation.
Exactly, the Matrix. Yeah, so we missed on the Santa Claus rally, barely. We had a nice first 5 trading days, so 50-50 so far. Nice. And I've been discussing the rotation trade for about a month now. I think that tech and AI is going to take a back seat for quite a while this year, longer than people expect. And it's already been happening for a few months on some of the mega caps. But that close today was pretty bullish. So we'll see. I could change, it's important to be flexible in the market.
Always.
Yeah. That's one thing you always said, that important to be flexible. I've just been wondering, Kyle, what's it going to take to change your mind from the red candle theory on October 10 to, can we call it green candle theory?
I mean, it's a red candle.
Yeah.
So, I've tried to figure that out. Like, where's the red line for me? And using Gemini, I figured it out based on previous all-time highs that were made after that big red candle. If it's roughly 3%, if the S&P 500 closes roughly 3% higher than the top of that big red candle on October 10th, it's off the table.
Okay.
So we're not quite there yet. It would be like 71.28.
It's so funny. Can I add a comment here?
Yeah.
Sure.
I'm one who doesn't subscribe to any of this stuff. I like to read it. I love Kyle's commentary. I read stuff online, other places, news sites, but then I just move on past it. Like, it means nothing to me. I keep trading what's in front of me, where I think things are going. But I bring this up because we can genuinely have different points of view, and I think this is good for the audience, that everybody can make money. There's no right or wrong answers here, and we all find our way to navigate, hopefully, towards being more wealthy. It's different ways to do things. And Kyle and I, we're both successful, but we look at things differently. And he's made me better. And I know I've shared a lot of stuff with some of the members, and I get a lot of comments from them. And it seems like I'm helping them in a lot of ways too. So, you got to be true to yourself. So if you have a different style than anybody that hears on the panel, you still have to take in what you can, figure out what is meaningful to you, and add and subtract from what you hear to your own personality, your own trading style.
Okay. So you've said this,
100%.
I think this is the fourth time I've heard you say it, Russ, where you trade what's in front of you. So can I be so bold as to ask you, like, what's in front of you? What are you trading?
I never get too far. I never get too far away from the semis and the emerging tech. I've gotten a little bit away from the high beta names, CoreWeave, things like that. I lost a lot of money in November on those things. So I'm leaning back more towards some established companies that I know better and feel better about. I'm still dabbling in some of those. So I still think tech is big, but I'm not just putting all my money in tech like I used to. I have been branching out. I'm into financial services. I got a big stake at a firm right now. Dave is a kind of a money lender for the big Latin American companies. I'm into them. Yeah, I got a fair amount of financials, fair amount of medical stocks, like Kyle's point about rotation. But again, I'll go if I find all the great charts on the financial side, I'll put 80% of my money in financials. So I'm not married to tech, but I just see that's where a lot of the profits can be. But I'm not keeping myself fully invested. I'm being a little more selective.
Okay. So more selective tech. I think because you've had such a great run of late, it's kind of maybe time to broaden it out a little bit, diversify. Yeah. Is that kind of what you're thinking?
100%.
Yeah.
And I love UNH for the long term. And it gives stability to the portfolio.
Nice. All right. So what could this mean for 2026? I think, Kyle, maybe you've done a lot of this already or covered this off indirectly with the comments that you've been making.
I like the one piece of the puzzle. So yeah, you don't trade on this alone. There's a lot of other things that you need to look at, including what's in front of you, like Russ says. That's really the most important thing. And that's
I learned it from you.
Nice. And that's what allows you to be flexible, so that if you're looking at something and it changes, hands off if you need to.
Yeah. Okay. Admiral, how you doing? Maybe give you a chance here to weigh in on 2026 and what the first couple of weeks have been here for you, or first week, sorry.
Oh, but it's been very pleasant. I've been following this, I've seen some of these concepts before. I'm an avid reader. I have every morning for about 25 years, I've started my day with the Wall Street Journal and the Washington Post. And the more I've read about the big red candle, the more I'm a believer there. I don't think the American consumer is very healthy, and I think there's a lot of stuff in the market that's on life support. Margin debt is high. I've just got to call it political instability, and we seem to be moving a bit more towards, in America, we're moving a bit more towards almost a state-involved capitalism. We see that with NVIDIA export licenses and things like that. So I find the patterns interesting, but we're in unprecedented times, and I if things were as they were 3-4 years ago, I'd be a lot more focused on the pattern, but because things are so different. 2026 things are fine. I'm keeping a fair amount of dry powder right now, and I'm taking about half the number of contracts that I usually do on my trades, just to keep even more flexibility. And I'm continuing to wheel my Tesla shares, and I'm starting to wheel GLD as well. And that's just for some income to keep the lights on. So that's how the start's been going for me. How do I think this year goes?
Yeah.
It depends on the midterms. If the
end of the
House,
year.
yeah,
So you're waiting for the end of the year.
It could change anything. If the House and the Senate flip, we're into impeachment. It's not even a question if that there'll be impeachment proceedings, and they'll take 10 minutes to impeach him. It's for me. It's just going to come down to the midterms.
Okay. Well, and you know the historical play after the midterms is completely solid. The next 12 months after the midterms are on average 16% return, 100% positive 12 months after the midterm. So yeah, I guess you could play that and just say, hey, for the next 8, 9, 10 months, I'm not going to do anything. Just put it into cash, maybe sell into some strength, and then after the midterms,
follow the
put it all in.
trades.
Yeah.
I'm liking some of Kyle's leaps. Thank you for Starbucks, by the way. Loved that trade, and then I loved it even more when it tipped a few days later. I was able to tack on a few more there.
I'm a big Starbucks holder.
There you go.
Nice.
Well, with what my family has spent on Starbucks, I feel like I'm entitled to. I'm entitled to some serious returns there.
Right on. So, Kyle, what have been your recent leap trades that you've been able to pull off? I know I've personally done very well following them, so I'm just wondering what kind of magic soup do you have over there when it comes up? Sometimes they're seemingly random. It's like, oh, let's, what was that? It was that toy maker that you did lately.
Mattel,
yeah. So that worked out, and then everything's been on fire for you.
Right. Yeah. So I've shared a few times a spreadsheet that I'm putting together with some hot names that I'm looking at, calling it the boom list. I think these things are gonna, and like half of them already have.
I had it up on my desk all day today. The boom list.
Oh yeah.
The
Nice.
boom list. Okay, great.
I think Dow
All right.
Chemicals is about to do the boom. We got in a leap today on that. It ended 6%, over 6% by the end of the day. So it's good gain quickly.
There you go. Yeah.
Celanese CE also breaking out or starting to breaking out. I don't have an official trade on that, but a lot of times I'll share when I'm getting into a personal trade or adding to my dividend account, which I did on both those. Stanley Black & Decker looking good. In fact, I was trying to put a trade on Monday, and I just couldn't. The bid ask spread is horrible on leaps, so I didn't get in it, and it's up pretty big by now. But can't get them all.
A comment on leaps. I guess maybe a year ago I was maybe educated and had a lot of posts on leaps and how to use them, and I got a lot of feedback on that, and so I really pushed them a lot just for knowledge sharing for about 6 months. And I knew some people started dabbling and kind of growing their skills using leaps. It just goes to reemphasize that if you use a leap and you're buying a call, so you have to be careful. You have to make sure that you really feel confident that stock's going to go up, because it can bite you the other way too if it goes down. So just a cautionary tale. They're a great tool, but use them conservatively and make sure you really feel confident that stock's going to go up.
All right, Kyle, step us through your Dow Chemical leap that you got here.
Yeah, so sometimes I don't even really know how I come across these stocks. I look at another stock and then on TradingView that looks good, that's on my regular watch list, and then I'll click on the sector or industry that stock's in, look at a list of stocks there and start clicking on them, and I'll find one that looks good. So yeah, Dow Chemical's been basing for 6 months under, I think, about $25-26 a share, and it's testing that area yesterday and today.
Hey,
and
Kyle, yeah. What time period is it? I can't see the print so small. Is that daily, monthly, week?
That one's a daily, or
no,
okay,
3 hour.
3 hour. Yeah, that's okay, 3 hour actually. My screen's so small right now, I can't see it. But not only has it been basing under that line for 6 months, but prior to that, it was using it as support for 4 or 5 months. So that's a good stretch, almost a year long of a very important level.
Yeah, I see what you're saying here. Right here where the mouse is going, that was support before, and now it's become resistance.
Yeah. So
Very
once
easy
it
pattern to
breaks,
see.
it's going to explode.
Excellent.
You think it's
sometimes
gonna? Where do you think it's gonna go? Explode up to like this previous resistance up here?
Exactly. That's my first target.
Yeah.
And so I'm a little aggressive on leaps, meaning I'll buy it right when a stock is testing the trend line. It hasn't actually broken out yet, and so I call that aggressive because sometimes it'll reject. But that's why it's a leap, because hopefully, a month of rejection, it comes back in time.
Okay, and you usually go a little bit in the money too. Like I think you bought. It's hard to kind of see here. This is $26. I think you bought. So no, sorry, it's at 26, and you bought the 25. So $1 in the money.
Yeah, typically I like
Yep.
0.65 to 0.7 delta, slightly in the money.
Nice. Yeah, good key there. So 0.65 to 0.7 delta, and then as it goes up and through gamma as well, it'll expand and it'll get up to close to delta 1.
Exactly.
If you got it right. Yeah. Okay. Anyone want to take this question? We got a question from Marshmallow. I know it's not Marshmallow, but dude, every time I
That's
see
what
your
I say in
name,
my
I
head.
always think Marshmallow. I'm sorry. How else do you read that? It's Marshmallow. Marshall Moyo. That's my best chance, man. That's all I got. Okay, what are you guys' thoughts on financials as a sector? Seems like a sector starting to push with XLF, that's an ETF, and Bank of America hitting all-time highs. Russ, you got this one.
Yeah, I'll at least give my comments. I love financials. I've been in JP Morgan for some time. I'm still in SoFi and Hood, JP Morgan. I'm in Dave. That's a financial. I love them. I looked at Goldman Sachs the other day. I'm not ready to buy that, but yeah, I think it's going to be a great sector this upcoming year, and I don't think it's going to be a bad year. So I have pretty good for me, I have good confidence in the sector.
Okay, so just you dig a little further into that one. So with lowering interest rates, or we have projection of 2 rate cuts this year, possibly 3 if we get a dovish Fed chair to replace Powell in May. Is that going to improve financials going through the year?
I would think so, but at the same time, I don't. I'm aware of all that. I'm looking at charts, but as Marshall Moyo said,
There you go. Got it.
A couple of hitting all-time highs. There's just a lot of good chatter about them, and I just like the charts and how they're moving. So, but the interest rates, they always drive everything. So, it can only be good.
Okay, quick question for you, Uzi, on this one. Would you buy a stock at an all-time high? Is that a bullish indicator for you, or is that a warning sign?
That's a great question. Well, first of all, I'm mainly a premium seller, so I'm not really a buyer of stock. But what I do like to do with stocks that are starting to gain momentum, whether it's a new high or a breakout of a recent base, is I take the call debit spread to the next level, if you want to call it that, and I turn it into a call ratio spread. So I'm going to ride the momentum up with a call debit spread, but I don't want to pay. I don't like to pay for things. So instead of paying for that debit spread, I'm going to now sell an extra call, which turns it into a credit. The only caveat is now you've got a naked call if price keeps going up. Now in the past, it's bit me once or twice. Case in point is Hood. I think we all know I had a little Hood debacle, but we're getting out of that soon. But what I've come up with, my new strategy is this: when I do a call ratio spread to ride momentum, whether it's a new high or, like I said, breaking out of a base, and I know I have that naked call, I set alerts on my platform, and I always make sure I have enough buying power sitting aside, which, by the way, I always have a lot of buying power because I don't use much more than 50% at any one given time. But I'll always make sure I have enough buying power or even an order ready to buy the shares to convert to a covered call on that extra naked call, so that you get the benefit of partaking in the long if it's going to keep going with momentum. If it stalls and falls back or goes sideways, you don't lose the premium that you just spent, let's say, for the call debit spread, because you've turned it into a credit trade. So either way, you can't lose. The only way you lose is if you don't buy the 100 shares to protect yourself if price runs through your short call. So
okay, well hold on. Okay, you need to step me through this call ratio spread, because you're losing me a bit on this, and I'm sure some members are wondering, what is he talking about with the call ratio spread? Do you have an example here of a trade that you posted with that?
Yeah. As a matter of fact, if you go to CoreWeave, recently,
Is that down below this one here?
That's the close trade for profit.
Okay.
But you can go to the initial CoreWeave trade. If you back it up, just keep going. You should come up to it.
Yeah.
It's
Alert,
called a double ratio spread. Keep going.
No.
It's CoreWeave. It should be there coming up. I can tell you when I put it on, maybe, if you want to get the date.
No. ENF.
So that trade was put on, just so you know, 12/16. So if you go to 12/16.
Okay, we're getting close.
Yep.
Here we go.
There it is.
Okay, so this is a call ratio spread. Batman strategy. Man, now I want to look at that profit and loss diagram on this one.
So what this one is this is actually called a Batman trade. I did a ratio spread on both sides, because so this wasn't a breakout trade or a new high, but what I saw was that CoreWeave was in a kind of like a zone where it might go up, or it might go down, or it might not go anywhere. So I want to take part in a move. I felt it was going to break either way, right? So I'm going to position myself for a long to the upside or a long to the downside. So, you call it a short. So I buy a call debit spread and I buy a put debit spread. But I also add an extra short put and I add an extra short call. What that does is it creates a credit. So as you can see in this trade, it took in $2.02 on that trade, which is a nice hefty credit. And I think the buying power usage on that, you just took it off the screen, Stephen.
Oh, I know. I'm trying to get her back.
Okay, no problem.
I'm trying to do too many things at the same time.
It didn't use a heck of a lot. Buying power was, so if you had a margin account, again, that's a margin account, about $700. If you don't have a margin account, it's going to use considerably more. But let's just call it maybe $5,000 tops. So it's a $5,000 margin buying power type of trade. But you're positioned for a breakout either way. Okay, that if it doesn't happen and it goes nowhere and theta just decays all of the legs, you're going to keep $2.02, let's say $2 premium for putting on a trade. I think it was maybe 30-day trade. Now, if you close it at 50% profit, that's still a nice trade. But if you get a move, now you're actually going to be able to partake in the debit portion of that trade. So let's say it goes up. So now the put side is going to decay and just go to zero, but you got a credit for that. So that's a good thing. As it goes now higher, your long 87.5 call is going to start going up in value, and your two short 90 calls are going to start also going up in value, but going against you. But that's okay, because only one of those calls is really going against you, because one of those calls is part of the call debit spread. So it's just a call debit spread with an extra short call. Now, the extra short call is put in so that we get a credit, because to buy a call debit spread is, it's a debit, so it comes out of your pocket. But by adding that extra call, it turns it into a credit. So we can put on a directional trade, but be paid a credit to actually open the trade. And then if price starts to gently go higher, that whole trade, meaning the ratio portion, the 1/2 on the call side, will also go higher. So you got paid to put the trade on, and then you get paid again a credit to sell it if price doesn't shoot through the 90. However, if price is now getting to 88, 89, 89.50, you buy 100 shares, so that now you've converted that short 90 call, the one that's kind of naked, into a call, into a covered call. Yeah. So now you can't lose. Now you're going to sell your call debit spread portion for profits. Yeah. And if price does keep shooting through 90, because again, now it's building up momentum. So there's a good chance it's going to go. If it goes through 88, 89, you're 89.50, you buy those 100 shares, price goes through the 90, you're covered because you have a 90 covered call. You actually make the profits from it. Let's just say 80, 89, 90 to 90, 50, another 50 cents. It's a huge trade.
Nice. Okay, so it's kind of like an iron condor to a degree, because you are going to profit if it stays neutral. But if
Correct.
it starts to move in one of the directions, either way, and it does so in a measured pace, you can quickly put on a covered call or a covered put and participate a little bit on that up or
Correct.
down.
And you said the
And
key
keep
word
yourself,
there,
yeah.
Stephen, measured
Yeah.
pace. This trade
Yeah,
has
if it
one.
rips, you're in a pain. You're in some pain. Yeah.
It has one risk, and that's a news event that gaps it through your 90.
Yep.
But that is very slim to none. It does happen, but again, you can't. That's one of those type of things you can't lose sleep
Well,
over.
like we were seeing earlier this week when Trump was talking about the defense spending, right? And it made all like Lockheed Martin and Raytheon move so fast up and down quickly. So yeah, that could be stressful if it happened to you.
Yeah.
A comment for you is so much respect for you and the others that put on these kind of trades. For me, it's too much in my brain, so I shy away from them. But I have so much respect for y'all because I know you're experienced at it, but there's a lot of moving parts, and
thanks,
yeah,
Russ.
a lot of respect.
Yeah, listen, I'm a high energy guy, and that's a high energy trade. It is. You really got to be. You just got to keep
on your toes.
Set alerts. But listen, I love my boring cash secured puts too, man. Listen, I don't want to live on a high octane all the time, but it's just
you're a high energy guy, Uzi, because you're young.
I know. I'm 62 years young.
Just keep drinking Celsius so my stock goes up.
Bro, I got like the fake Celsius right here. It's like Alani. I don't know if you guys got that in the States.
Listen,
Alani.
Celsius bought them. That's Celsius.
Oh, okay. So it's like Celsius rebrand. It's like watered down Celsius. Is that what that is?
They're owned by the mother company of Celsius now. They bought them. Yeah.
Okay. All right. Let's move on, guys. Let's talk about the top 50 assets. So this came out near the end of December here. The chart that I have here is for December 22. See if I can do a little zoom in. No, I can't. No. No. Google doesn't let you do that. Okay. All right. So these are the top 50. Okay, here we go. These are the top 50. So not surprising. Gold is number one, especially after the massive year that it had. And then NVIDIA's number two. So the call it 4.5 trillion, Apple at 4 trillion, Google or Alphabet at 3.75, Microsoft at 3.6. Like when you were trading Uzi and Russ, did these like numbers make sense? Were there $1 trillion companies back in the 80s and 90s? No, right? They're just no.
Billion, Cisco, WorldCom. Yeah. Remember WorldCom, Russ?
I do.
Enron.
Yeah, no, I remember Enron. Yeah, for sure. That was fun. Yeah. But silver making a good run, at the number 6 spot there at 4 trillion or 3.9, but Amazon at 2. Bitcoin, why is it so low? Man, it should be higher, don't you think?
I think it's coming.
I think so. Meta at 1.6, Telsa at 1.6 as well too. So it's kind of cool to see that this is worldwide, right? So we got Saudi Aramco at 1.5, Taiwan Semiconductor, Berkshire, Eli Lilly, Walmart, etc. So it's a great list. It's kind of nice to see where everyone ranks and scores. Now that's nice to see it as it was in 2025. Okay, Uzi, sounds good. Thanks, buddy.
Yeah, my pleasure. Thanks, everybody, and have a great rest of the webinar. Great information, Kyle. Thanks for putting the slides together, Stephen. Admiral and Russ, great being with you guys on the panel. And I do apologize, but we'll do it again. Okay.
No, it's all good. Yeah.
Take care. Have a good weekend.
Thanks, buddy. Okay, so the next question becomes: where are these assets going to go in the next 10 years? So the question I have for you guys is, who's going to be in the top 10 in the next 10 years? So we're talking 2035. Where do you think these guys are going to go? So I was like, wow, it was my question. So I was like, that's a fantastic question. You should really ask that. And so I was thinking, what's going to be the factors that play into this? So this is my view of the world and how I'm seeing things go. But let me share with you what I think, and then you guys can all agree with me, and we'll all be really, really happy with how that went. No, of course, if you guys don't agree or you think something differently, please let me know. So disruptive tech and trends. So keeping an eye on emerging technology. Think possible game changers. There's going to be something 3, 4, 5, 6 years from now that's going to really rock the world hopefully for good, right? And a new technology comes up like AI. Yeah, it has taken about 10 plus years for it to come to be where it is, but it wasn't until about 2023, late 2022, that ChatGPT came onto the scene. And really, wow, that has had such a disruptive impact on so many industries, but also catapulted so many others. So riding some of the macro waves, so AGI, robotics, RAAS, so that's results as a service. I think that has a lot of really good potential to disrupt software as a service, clean energy, cryptocurrencies, biotechnology. So is there a way for us to combine AI with biotech and find out how we could live another 10 or 20 years, or maybe even cure cancer? That'd be amazing. And then space. I know we all grew up on maybe some of us didn't grow up on Star
Lost
Trek,
in
but
space.
yeah. So and how do all those episodes start? Space, the final frontier or the next frontier. So we got to get up there. We got to get back at it. And I think there's a lot of potential for growth and technology expansion through space. So I think those will be the companies that have a really good potential and prosperity in the next 10 years. So I'm looking for companies that have jaw-dropping R&D, clever partnerships, and scalable models. I've been listening to a bunch of podcasts over the Christmas holidays, and it's just hilarious to me how so many people that are the billionaires today and influential CEOs of tech companies knew each other and worked with each other 10 years ago, 5 years ago, 15 years ago.
Yeah.
It's insane. It's like, wow, you guys came out of this like petri dish all together and you're making an amazing impact on all the world. So this is kind of what's going through my head when I look at what's going to happen over the next 10 years. I'm curious on your minds, where are we going?
I mean, I think space is going to be one of the biggest things. And if you're talking 2035, space related sucks. Oh yeah, for sure.
Exactly. Yeah. And
I've shared
robotics. Yeah. I know, like there was that one post I shared in the Discord, I think yesterday, where it's like there's Optimus robots working in a Tesla factory, manufacturing and putting together cyber cars that are going to go at the end of the line and then they'll just go start doing autonomous driving. I think that's amazing.
I had a discussion with a buddy of mine the other day, and it was about how jobs are going to be replaced, of course, with robots and AI and things. And I said, they're going to make robots that can repair. Well, he said, well, there'll be people to repair the robots. I said, they're going to make robots that can repair the robots. So there will be an Optimus repairing other Optimuses. And,
exactly.
It's going to be a problem.
So even right now, there's certain surgeries that have to get done like on hearts or in the brain that are too precise. The procedure is so precise that you can't have a human do it. So even today, they have to use a robotic or mechanically controlled device in order to make the precision to cut or to insert the medical procedure.
It's amazing.
So even today, they have some robotics that are being used, and that arm is just going to get longer. That thought process is just going to get more complex to diagnose and to do the procedure on those. So, okay, I like that. So Kyle's going with space and robotics.
I like you mentioned bio side of AI. I go back to about a year ago. Jensen is in this podcast and somebody's show. I watched it for an hour, but he actually talked about that, the advances they're making with AI into the bio side of medicine and coming up with cures and anything to do with the bio side and the things that they're getting involved with. It was just fascinating. I think that side of it is still in the early stages, but you can imagine where we're going to be in 10 years. So I think anything that's got to do with autonomous, any kind of autonomy, we get driverless cars, but the factories, all the kind of robots. I own several robotic companies now. Space, I love. One of the things I think is going to be a success. Some of the companies that are going to come up, we don't know. We can't even imagine. They're going to come up with some new technology, some new business model, and they're just going to skyrocket. That's just part of the world we live in.
It's funny you say somebody's news is going to come on and they're going to skyrocket. Now, I just think, okay, so there's a company that's not even on here yet that will be on here, and that's SpaceX. When they IPO, they're supposed to be valued at 1.5 trillion. So right out of the gate, they're coming in. I guess they won't make the top 10, but they're really in the top 15. So right out of the gate, we have a new, and like you were saying, that's going to rocket up to the top. Like literally and metaphorically, they will be on the top 10 here, and they're going to make a huge splash. I'm already setting aside cash for that. And Kyle, there's not going to be a chart for us to look at when it IPOs. It's going to be a dot on the chart with a candle, and I hope it's going to be a green candle. Could be a red candle, but we don't know. I am definitely buying 4% of my portfolio into SpaceX when it IPOs.
Yeah, if I can get in a pre-IPO, for sure. If I have to wait till after the IPO, I'm gonna wait. I think there may be some
You have to.
topish action
It's mandatory. Kyle, we have to go together on this. I can't buy SpaceX without you. I can't. That would be like a conflict of interest.
If we can get on the pre-IPO, for sure. Yes.
Okay, so that's a really good. So do you know how are you getting in on pre-IPO on SpaceX?
I don't know yet. I don't know which brokerages are going to allow it. Hood sometimes will allow IPOs now. There were a couple of
I did a post on it. If you want to do it now,
there were a couple of other apps I used to use years ago where I could get IPOs.
While he's pulling that up, I've been trying every week. I'll go to the SpaceX careers page and I'm looking at what kind of jobs I want to get in. I'll be a janitor. I just want to get in.
Yeah, right. I'll be a janitor. Like, let me clean your bidets. I will do your bidets. Here,
we don't have those in America, man.
That's nobody knows what I just talked about. They're like, "What the hell's a bidet?" So that's how Americans wipe their ass with toilet paper. Everywhere else in the world, we use an elegant cleaning machine that uses water, and it's much more hygienic. The Admiral's like, WTF, man, I don't use that. Okay.
you laugh, but when I redid my house this year, I had them put in
a bidet. Okay. All right.
The fancy Japanese toilet.
Yeah. The one that yeah. Okay. So Kyle, I put this out. This is in the Trader Talk channel. If you want to get SpaceX exposure, here are ways you can do it. So Google or Alphabet, they already own 7% of SpaceX. That'll go down as one of the best venture capitalist plays that a public company has ever made, because that 7% is going to become worth a massive amount of money.
Definitely.
Yeah. And so then Neptune Digital Assets, they own, they're a small company here in Canada. They're worth about $80 million. So think microcap, but 10 to 20% of their assets are tied up in SpaceX already. And they also have XAI exposure as well too. Now, if you are Canadian or you have access to the TSX Venture Exchange, the ticker symbol's NDA. If you're in the States, like almost everyone is, it's NPPTF. It's an over-the-counter kind of like a pink sheet thing. ARC Venture Fund also has exposure to both companies. That is an interval fund. It's a little more difficult to buy. I think SoFi allows you to buy this fund, ARC Venture Fund. You can do it through there, but you can check Robinhood or any of those like really aggressive trading apps. They might allow you to get in on that one. Also, Destiny Tech 100 DXYZ. They have 20 to 30% of their assets in SpaceX. And then there's the crossover ETF with 10% of their assets, and then the Barron Partners Fund, which is a mutual fund, which I don't know. I think I'd go somewhere else before I'd go to Barron's Fund to own a mutual fund. Owning a mutual fund seems like, I don't know. Can't really do it.
So 1980s.
It's 1980s, right? Like, get on the exchange and so I can trade you. So anyways, so these are ways in which you can get exposure to SpaceX pre-IPO.
Awesome.
So just,
yeah. Thanks for sharing that. I missed that.
Steve, one comment about the emerging companies that could be in that list, in the future. If one of these great pharma companies comes up with any kind of cure for cancer, Alzheimer's, dementia, or any other big diseases that are worldwide, they're going to skyrocket from being a large cap company to right at the top of this list in that first column.
Oh, definitely. Yeah. Anyone who owns, imagine owning the patent on how to cure one of the major cancers. And then you can just and then once you've cured one of the major cancers, you just take that solution and see how you can solve the next big one. And, what's the difference? What's the delta? And then let's cure that too. Okay. So what's going to be the top 10? So I asked Gemini, who's going to rise? Who's going to fall? Now, this is Gemini, so I was like, I don't know. You're going to say Google, or you're going to make yourself look really good. However, it says Microsoft is actually going to rise to the top 3. I don't know if I agree with that, because I think results as a service play is going to really eat into Microsoft over the next 10 years. If you don't know what results as a service is, it's you don't pay for a subscription for like a particular time frame like you do with Microsoft. You usually buy an annual subscription and get all of Office suite. Results as a service is I only pay you if I get the result that I want and I can verify that the result actually happened. That's kind of a software model that's going to really eat into software as a service, because if you don't get the result, I do not have to pay you. Even if you did the work and even if you did the effort, you don't get paid until there's a result.
Yeah,
And so there's a company called Macro Hard, which is IPO'd, sorry, not IPO'd, but it's founded by Elon Musk, and it's kind of a jab at Microsoft. He's coming up with a company called Macro Hard, and that is going in with AI to disrupt Microsoft and take away their foundation there. So yeah, if you go into Google and say Macro Hard Elon Musk, you'll see some pictures of it already. He's even playing on their logo. It's got those 4 little quadrants, just different color, and it's got that Macro Hard written out, kind of like it's Microsoft. So good to see that. Looking forward to that. So I don't agree. I don't think Microsoft's ever going to go any really, like in terms of relative here, they're in the 5th spot. I don't think they're going to go higher than that. Bitcoin to the top 3. So Gemini likes Bitcoin's proposition to go from number 8 to number 3. Do we agree with that, guys? Or
Yeah, I do.
what do we
I
think?
it's going to be, I think we're still in the midst of a correction that may bottom around 60K, but I think 250K in the next couple of years.
I'm not a
250K
I'm not a
couple years.
crypto bro, so I won't say anything.
Okay, that's good, Russ. We don't want to hear anything negative here on the show about crypto, because we're quite sensitive to negative comments on crypto. You'll never be invited back if you don't agree with our views on crypto. If you don't agree, we will send you down to Venezuela. You and the Admiral.
Listen, I have owned Bitcoin. I've owned strategies.
Dude, you were like, weren't you mining Ethereum with me for like a year?
I made a fortune with Ethereum.
Yeah, exactly.
Till we didn't, right?
Till we didn't, and then we had to stop, and then we mined shit coins for a year and found out those were even shittier than the other shit coins.
It wasn't worth the effort.
Yeah. Okay, next one, Amazon to the top. Gemini thinks Amazon's going straight to the top. Like, I'm like, whoa, hold on. The top is $30 billion of gold. So I don't know how that's going to really work out. So gold has to fall and Amazon has to make an absolute rip. I don't agree with that. Dead to me on this list. What? Okay, sorry, just reading some comments that are coming through. Then fall, NVIDIA.
Amazon has been so soft the last 5 years. Like, it's filled with potential every year, but it always ends up just mediocrely. So disappointing.
I know. I don't know. What's your take? Kyle, what do you think on Amazon to top position?
No, I don't agree with that. I think Google is going to be
exactly.
top.
I'm with you, Google.
It's funny that Gemini itself is not telling us.
I know. It must have had like some like sensitivity things like, nope, I can't do it.
Exactly.
Can't recommend myself. I got a conflict of interest. And it's funny too, because I did this slide, I don't know, like a week ago. And today even, we all heard, right, that Google jumped over Apple as number 2. Or sorry, number 2 company, but number 3 on this position. So that's fantastic. So I don't know if it's Apple falling or Alphabet rising so quick, but I think like a really easy play for the year is keep on selling put credit spreads on Google to stay out of the money. Just keep on harvesting that. I think you're going to win probably 8 or 9 times out of 10 on that. If you play it smart, just follow Kyle, myself, Russ, the Admiral on how we're playing Google. That's a really easy one. I also think Broadcom has a really good potential through the year too. So you can just keep on selling put credit spreads on that, stay out of the money, stay away. And I think you'll just ride that one up to the top. Of course, you got to own some shares. So those are good companies to own as we go through it. Look at it. Hey, Marshmallow, you're on with us, I guess. Yeah. So Google goes up, up, up. All right. Or sub 8697, ARK has some app to invest in IPOs, which is available only to US customers. I didn't know that, as I'm not American. So I don't know. Do you guys know about this? I don't know if they have any app.
I avoid IPO, so I don't know.
Russ, you're gonna disappoint me when SpaceX IPOs this year, and I'm like, dude,
I'm
I bought.
telling you. I'm going to be the janitor, and I'm going to have my own chairs.
Yeah, you're gonna. Well, see, we're not going to be able to do that because they're going to have a robot, like Marshmallow says here, and they're going to have a self-cleaning bidet. So we're not even going to be able to be the janitor. Man, we're going to be cleaning. Run the chart through Grok and see where Tesla lands. Oh, Gronk. I think he's saying Gronk or Grok with a K.
Yeah, with K.
Yeah, there we go.
I think
That's
Tesla
true.
will be too.
Can somebody run that? Can somebody run? Where do you think Tesla? Like, you can just, if anyone's on the, just take this, take a screenshot of it, pop this in through Grok, and just say, where do you think Tesla will land in the next 10 years? Will it go up or down? Just see what it
I think
says.
eventually it'll be Gold, Google, Tesla, top 3.
Oh, my man, there we go. See, this is why Kyle and I are on the same team. We even wear the same shirts. Look at this, bro. Like team CFU.
Right.
I bought a lot more Tesla today.
Yeah, see, exactly. Tesla for the long run. I actually have I'm going to be doing a YouTube video on why you should be investing in Tesla. And I'm not even going to talk about their electric vehicle sales. Like, put that out of the window. They're not just an electric car. And I'm going to go through all the different things they're doing.
Yep.
That guy, Elon Musk, I don't know how he compartmentalizes his brain. I don't know. I don't know how he's even staying alive, to be honest, because he's in so many different things. Like, Tesla's one thing, and then you got SpaceX, XAI, etc.
Even beyond that, he'll in any kind of podcast or something you listen to him talk. He knows so much about all these different topics. Not even stuff he's involved with in his businesses. Like, the guy, his brain is.
Have you ever heard him talk about the Boring Company?
Yeah.
Oh yeah.
Oh yeah.
Okay.
Well, that's one of his companies.
Yeah. Oh yeah. Exactly. Yeah. I bought some of their merchandise. I'm still waiting for it to be shipped. I must have not. I guess they're all out of flamethrowers.
Hey, Neuralink, that's freaking gonna be awesome.
Right?
Wow.
Yeah. Guy works at a different level.
Yeah.
Okay, so we asked Grok, and Grok said, what was it? Top 3? Nobody ran it? I asked you guys to run it. You guys didn't. Come on. Okay. Dead to me on the list as okay. All right. John Silva agrees 100%. Yes. Good. Okay. So, and then Gemini said Tesla falls out of the top 20. I don't agree with that whatsoever. So Gemini's dead to me now. I'm not going to use it anymore. Forget that.
I love it. I'm not the only one with a dead to me list. I love it.
Yeah, right. Dead to me. Yeah, exactly. And then Kyle has his boom list. So we got all these great lists going on here at CFU. It's the only place you can get a boom list and a dead to me list in the same community. It's fantastic. Okay, let's go on. Covered calls. Man, after all the exciting things we've covered off, we're going to be going for an hour. I think we're going to skip covered calls. We're going to wrap that. I'm going to do another YouTube video in about a week or so. Actually, next Friday, I'll go over covered calls. It's going to be an in-depth, step-by-step, how to do a covered call. And at the end of that, I'm also going to have a PDF that I'll send out to all the members. So you can all have a guide to teach you how to do a covered call. That's kind of the beginner position, the beginner trade. And I think that was some feedback that we got from you last week, Russ, is, hey, we should really start to do kind of the basics, right? What's a covered call? What's a call option even? And then we can get into cash secured puts, because we have some traders that are just starting and some traders who are not. But let's do that. So I'll skip these slides here. I do want to kind of just focus in on one. If you are selling a covered call, and again, this is my opinion. Some of the traders on here will disagree with me possibly, but the best time to sell them is into strength. This is a chart on Tesla. It had a good run. It was looking like it was going to hit the 500, and it triggered off this. I don't know if it's a weak high or a strong high. I can't forget, but that's a really good time to sell a covered call, is when that high hits and it's hitting into resistance. That's a odds-on good strategy for you to do on. So in the next week's video, I'll go over how to do that, how to recognize that pattern when it's showing relative strength. Good time to sell some of that. We did that this week with Bitcoin. On Monday, we sold the 55 covered call on IBIT, And when it was showing a lot of strength on Monday morning, one of the members, I forget who it was, he helped us recognize that pattern, said, hey, you should sell that covered call on IBIT if we're going to do it. It expired, completely worthless today, so we were able to book all that money. Okay, and then we'll go over Open Option Strat, fantastic tool for you to be able to visualize and see the trade before you actually execute it. Okay, my WTF moment of the week, the what the fuck? No, you gotta be kidding me. So last week, when the Admiral was sitting nice and snug in his bed in Venezuela, right, Admiral? Maduro got captured, and they took him to New York. Gave him some allegations. I don't know what the allegations were in particular, probably narco-terrorism or something like that. However, they found out that this is what I don't understand. What the? You got to be kidding me. Venezuela has 600,000 Bitcoin? Where did that come from? Where did this even, and where are they keeping this? Who has the keys for this? Who has the USB drive that has this flash disk of Venezuela has 600,000 Bitcoin? Where have you been storing this? You've been keeping this a secret the whole time? Oh yeah, by the way, talk to Tommy in the corner there. He's got 600K in Bitcoin. Do you believe this,
wild.
Kyle? Yeah, it's wild,
No,
right?
I can't believe it. Yeah, how'd they?
I remember when they started this a few years ago, because
they
their
did, yeah.
currency was worth like nothing. So I remember when they started and they started buying up, and then it just sort of fell off the news. And you know, we'll be very interested to see where that.
So the story goes with this, that there's a lot of sanctions on Venezuela. So I don't know if everyone knows this. But you know, Venezuela is not exactly the most popular country in the world. They are part of the OPEC. What is it? Oil, petroleum. What's OPEC stand for again, Russ? Oil, petroleum exporting countries. Okay, so Venezuela is part of OPEC.
Yeah.
Okay, and oil producing. There we go. Exporting. Okay, and so they had a bunch of sanctions on them. Nobody trusted. They didn't trust anyone else in the world. So what they were doing was selling their gold, selling their oil, and they wanted to have some way to secure this monetary financial power that they had. They didn't want somebody coming from the IMF or other sources. So they started buying Bitcoin. And apparently, when they started buying it, it was only worth $5,000 a coin. And they were just trying to buy this stuff and hold it and not do anything with it. And I don't think they even kind of realized that it could actually go up in value. Like it had gone up in value to 5,000, but was it really going to go up to 126 by 2025? And staying around 90,000 as we start 2026? I don't think so. But they just kept on buying and hodling, as they call it. But now, I mean, they're competing against MicroStrategy and even the IBIT ETF. And Satoshi Nakamoto has his $1 million stash over there. So I don't know how the hell they can even really prove this or how they can even say this, but it's a fantastic story that, you know, Venezuela has 600,000 Bitcoin. So, Will, while you're down there hanging out, if you don't mind, get to the bottom of this. Find out where are they keeping this Bitcoin, and if so, what's the 12 worded pass key that they have for this? We could really use that.
I remember years ago when they were buying a lot of those Bitcoins, they just kept stacking them.
Yeah,
exactly. Right. So, like, because I think going into this, they thought they maybe had like 240 Bitcoin. Lo and behold, they have a stash. So this kind of comes back to like, you know, old, like, you know, mid-century when they were going around the world trying to conquer nations so they get their gold. Now it's like, hey, what do you got for Bitcoin? We want your Bitcoin now. So anyways, if you have some Bitcoin, don't let anyone know because they'll come and snatch it from you. But yeah, so that's the WTF moment of the week. Venezuela is sitting on 600,000 Bitcoin. I'm like, what? Come on. Like, you got to be kidding me. But that's the rumor on social media. And you know what they say about social media? I don't know. You tell me what they say about social media. Nobody wants to say it? Come on, Kyle.
I'm not saying anything.
Okay, we're probably going to have to edit that portion out of the video when we put this on YouTube. You guys won't get that one canceled.
We're all leaving you hanging.
just leaving me hanging. I'm like, okay. All right. So that's it. Thank you everyone for tuning in. Thanks guys for your time this afternoon, for joining us. And this is CFU. We're a Discord and a trading service company. We help people learn and become better traders and better investors. If you are interested in learning more about our services and the community that we run, the link is in below. JoinCFU.com. I have it here on. Oh, I got to point to the other side. Oh, no, right there is where the link is. JoinCFU.com. Go there. We do have a 26% off sale right now for New Year's. And unfortunately, it does expire tonight at midnight. So get it while you can. We have a website. We have a blog. We have a YouTube video channel. And we also have our famous Discord service where Kyle teaches us every day how to make fantastic money. I alone made thousands of dollars off of his trade for Novo Nordisk this week. I wasn't even watching it, but Kyle does all the homework, finds the deals, sends the alert, and all I have to do is go into my brokerage account, enter in NVO December 18th 50 call, and he even tells me the order, like the limit order, 90.10.90. I put that in, and then this morning I woke up and it was at $16. So essentially a 50% return in just 9 days there. So I really like that. Thank you so much, Kyle, and you're a fantastic trader.
Thank you.
We love you, man. And so keep it up.
All right. Thanks.
And everyone else, the Admiral, keep on enjoying Venezuela and come back and bring us some souvenirs. We'd really like to see those. Russ, thank you for joining us as well. And thank you, everyone. We'll talk soon. And we'll be back next week talking about covered calls, and talk to you guys later. Thanks.
Have a good weekend, guys. Yep.
Thank you.
Let me know when that